In Millennials and Money today, automakers are very concerned about sales numbers as the next generation has Uber and Lyft at their fingertips versus actually owning a car. But according to a recent report, gas consumption is increasing and has been driving higher during the past 7 years. It's considered a sign that plenty of Americans are getting behind the wheel, and that includes millennials. We are turning to Greg McBride, the Chief Financial Analyst at Bankrate.com, for his take on what car and truck buyers can expect when borrowing money for loans. Greg.
Auto loan rates can be expected to continue to increase this year fairly modestly. New car loan rates that on average are starting the year at about 4.75%. Will end the year on average at around 5.5%. A bit higher for used car loan rates. I expect those rates will finish the year between 6.25% and 6.5%. But again, that's at the average. There are lower rates available if you do shop around. And don't be surprised if dealers and manufacturers trot out some attractive financing options later in the year, particularly if they need to juice sales.
Greg, what else can you tell us about your outlook on car loan rates?
I wouldn't sweat rising interest rates on auto loans from an affordability standpoint. The bottom line is it just really doesn't have as big an impact on affordability. Every difference of a quarter percentage point on a $25,000 loan really only adds up to about $3 a month. So even the cumulative effect is pretty modest if the Federal Reserve were to continue to raise interest rates. What is a big determinant, though, in the interest rate you pay is your credit. If you want to save some money, improve your credit. That's the difference between borrowing at 5% or borrowing at 15%. And that makes a whale of a difference in terms of what you can afford, in terms of the size of the car and the amount that fits in your monthly budget.
Do you have any tips for car buyers?
One thing you can do is just buy a less expensive vehicle. The average amount financed on a new car purchase is over $30,000. And if you run into financial difficulty, there's just no wiggle room on that. A $500 a month car payment is a $500 a month car payment. You just don't have a whole lot of flexibility. It really restricts you financially. Nothing busts your budget faster than locking yourself into a gargantuan monthly car payment.
Thank you, Greg. Always happy to have you on the show.
Thanks, Angie.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.